Hi, this is Robert from Trade the Moment. I would like to show you a few different charts on a few different setups that we look for. So let's take a look at some charts. This is a 5-minute 4-bar pullback. So here's a gap up. We like to trade it in the direction of up. It pulls back 1, 2, 3, it dojis, and then 4, 5. So you got 5 bars. 4 or more bars is a nice setup when something long pulls back. That's a nice way to enter. You don't want to chase a bar. You don't want to chase a second bar. But if it's a gap up and you like this, you like to trade it in the direction of the gap, you could go and wait for the pullback. So you got 5 bars here that pulled back. You got a tight base right here, and this gave you a nice opportunity for a quick scalp right there. If you look at it here, here's the base. You're looking for the breakout of 32, call it 23. You get the break on this bar here. You could use that as a stop, 31.88. You got yourself 35 cents in risk. Again, the breakouts right here, 23, 32, 23, 24, 25, 26, whatever you have to get it. Once it breaks that tight base, because again, it's a wide range bar. It pulled in. It's still healthy trade on the day. Still held the gap. Okay, so there's your pullback. 4 or 5 bars. 4 or more bars actually. You got a tight base. You got a breakout. And this trade went from 23 all the way to almost 90, I would say. 88, we'll call it. The high of 88. So there was plenty of opportunity here to make some 60 cents on a quick trade. Next, you have CRSR. The stock has been in play a lot lately. It's been on the radar a lot. CRSR here, you have a gap up that failed. This faded. It took the day out and went lower. So this is a trade that you would like to trade on the short side. Reason being, it failed. It gapped up here and failed. So this trade came down. Again, 1, 2, 3, 4 bars. 1, 2, 3, 4 bars. Reversal right here. So you reversed here on the gap up that failed and became a gap down. Once it gapped down here and broke the day, this stock should only be traded to me pretty much in the direction of short, because there's sellers out there. You can see the volume increased. It tried, it couldn't take the day again, it couldn't get back to where it was. So this here was a close of 38.28, was a good short. And you could have used these pivots as a top. So 38.28 with a high of 38.68. So this was a 40-cent risk. So once it broke here, you put this trade on with you enter short here at 38.28. Using 38.68 as a stop right here, this pivot. So you have 40 cents in risk, and this was another trade that offered great opportunity. You could have took the next bar if you wanted to. You could have made about 50 cents just on a 2-minute bar. If you look up here, it's a 2-minute chart. So the breakdown here, just the next 2-minute chart was 50 cents. Then it came up, and that became the new resistance. It couldn't pass here. So at that point, if you held it, once it took the next bar out, the bar that was the 50-cent bar, you could have used this as the new stop. So you got in at 28, you could have used 28 as the new stop and let this trade just go either for this bar, which would have been almost $1. Or you could have based and let it come down. It could have picked up here. You could have sold it at any point. I'm not going to say shorted here and cover here. That's the perfect world. But to put you in the world that I like to be in, is short at the 28, and within 3, 4, 5 bars, you're able to make profit. And if you don't take the profit, you at least can move the stop down from where you shorted it. At 28, you can move your new stop at 28, and then you have no more risk. You would have shorted it at 28, you would have moved the stop from up here to 28, It would have been a breakout even trade if it stopped out, and never stopped out. It gave you opportunity to make money throughout the trading day. Your last chart I'm going to show you is GameStop. This stock it opened up, it got extended in the morning, pulled back in, based in a range here of, call it 14 to 14.20, a tight range. This wasn't going to be a stock that made you weak, but there was opportunity to make as a scalp. So you got involved in this stock after it based and then broke out and created a new base. So here was your new base, 14.19, and the high of 14.34. So this is a 15-cent stop. So when this breaks this tight channel, this base, going in the direction that you wanted to go in long, when this breaks the top here at 34, your stop automatically is 19. So there's a 15-cent stop. So you put this trade on, and this is a 5-minute chart. So within 15 minutes, this trade was never in trouble. This trade was always working, and it went to 43, and then you could play it bar by bar, meaning you could put your stop where you entered, again, at 35 cents. Okay, so that's where your stop goes. So here's a stop that started out with 15 cents of risk, and now once it goes, you can move your stop to where you paid, where you bought in at 34, and then bar by bar, meaning the prior bar here, that would have been 44, and then when it goes here, you move it again, and 2 bars later on, you move it again, another bar, you stay 2 bars behind, 1 bar, 2 bars behind is better. So now your stop is 50 cents. And then when it gets up here, you move your bar again. And this is how we like to trade. Now your stop becomes 71 cents. You got involved at 34, 35. You got to stop. And this stock, when it gets extended, not to be in the perfect world, but when you see an extension like this, you automatically move your stop to the prior bar. You get stopped out, it's okay. Half the position at a minimum, 2/3, 3/4. Preference is up to you. I prefer a minimum of half. There are many times I'll use 2/3 or 3/4. If you're on Discord, you'll see me post move stop, move stop. That's the lock-in profits. This stock stops out somewhere in the neighborhood of 96 cents. You got in at 34. This was 60 something cents. But as you can see, bar by bar by bar by bar by bar. And at sometimes when you get this big pullback and this little bit retracement, you can take half right here at 13 and the other half here. But at no point was this trade ever in trouble. It was a tight base. It was that broke out right there. Tight base in the direction of the trade. That is another trade that will work very well most times. Patterns like these create great risk reward for all trades, with a higher percentage of winning trades and a better return than losers. This is what makes the difference in your P&L. In my room, you will be given many ideas that you can use just like the charts that you've seen, proven patterns that work over a period of time. I look forward to seeing you in my room or on Discord. Until then, happy trading.